Here's your weekly update on mortgage rates and key economic factors affecting the housing market. We have 7 points, so hang on. Number 1, stock market and mortgage rates. Mortgage rates are heavily influenced by the stock market. So when equities perform well, investors tend to pull money from bonds, leading to higher mortgage rates. But conversely, when the stocks struggle, investors flock to the safety of bonds, often resulting in lower mortgage rates. This past week, we've seen markets fluctuate, and that has had a mixed impact on rates. So staying informed is really key. Number 2, tariffs, trade, and housing materials. So everybody knows President Trump's recent tariff announcement has stirred economic conversations in a lot of them, particularly concerning Canada, Mexico, and China. As the week progressed, adjustments in these policies have influenced global markets. A key concern for our industry at this point is that potential impact of tariffs on housing materials. So if tariffs increase the cost of lumber, steel, and other building materials, we may see rising prices for new home construction. And additionally, immigration policies and potential deportation measures could lead to labor shortages in construction, which may slow down housing starts and affect overall affordability. So keep an eye on this. We're not sure what's going to happen, but those are things that could be expected. Number 3, Federal Reserve rate watch. The Fed meets again in about 40 days, and as of now, there's an 85.5% chance that no change in interest rates will occur. However, economic data in the coming weeks could shift expectations, so keep an eye on inflation and employment figures. These are crucial. Number 4, inflation reports. So good news on the inflation report. Last week's reports were somewhat favorable, suggesting that inflation is stabilizing. This is a positive for mortgage rates, as lower inflation typically supports lower long-term interest rates. Number 5, mortgage rate trends overall. So mortgage rates have slightly improved over the recent weeks, which is excellent news for home buyers, refinancers, lenders, and realtors. However, market volatility does mean we need to stay vigilant and we need to watch, as rates can shift quickly based on economic developments. Number 6, key economic reports from last week. Manufacturing PMI came in better than was expected, signaling economic resilience. JOLTS job openings lower than expected, suggesting a cooling labor market. Crude oil reserves dropped significantly, which could have an indication it's a possible uptake in inflation. Initial jobless claims came in slightly higher than expected, which could indicate a slowing job market. Number 7, what's coming? On Friday, this is a big day for economic reports. We'll be watching the non-farm payrolls and the unemployment rate and the average hourly earnings month over month. Additionally, the Fed Monetary Policy Report will provide further insights into economic trends and potential rate decisions. So stay tuned to my Instagram and Facebook stories for daily updates on mortgage rates and economic news. As always, just reach out to me if you have any questions about how these factors may impact your home financing options, and have a great weekend.